Thanks for taking the time to hear the Intermin story. We're essentially a mine development company embarking on a fairly major, significant growth phase through M&A. So I'll walk you through that in the short time that I have. Currently, in the red and the yellow, our 100% owned projects in the Western Australian goldfields. We've got a current 670,000 ounce resource, about 900 square kilometres of tenure on the major geological shears in and around the world-class Kalgoorlie goldfield. That's about to change. Corporately, we have cash, 6.3 million in the bank, very tight capital structure, we don't have any debt, and we have skin in the game ourselves with 5 to 6% holding with our directors and management. We started off essentially as a self-funded explorer. We haven't raised any capital since 2016. We've got that money through divestments of non-core assets, through royalty income streams, and through turning small open-cut mines into money through contract mining and third-party toll milling. The last mine we finished, stage 2 of Teal, completed middle of last year, generated 7 million in cash, 3.2 grams a tonne. The team did a great job delivering on the feasibility study estimates, and we started to put that money immediately to work. Over 100,000 metres of drilling. That added 500,000 ounces to the resource book, and we've added over 590 square kilometres of tenure to our asset portfolio. Our team, mining engineers, metallurgists, geologists, very technical group. We've all been out in this area. We're focused on gold because we know it. We're focused on the Kalgoorlie goldfields because we know how to do business there, and we've all ran operations in this region over the last 30 odd years. But I think the big step change is to become more relevant in the market. We needed an increase in asset base, we need an increase in market cap, liquidity, and scale. So we have embarked on an M&A process over the last 6 months. We saw that Randgold and Goldcorp were already taken, but our preference really is our own backyard in the goldfields of Kalgoorlie. Step 1 is the merger with McPherson's Resources, ASX-listed company. Signed that in December, and it holds the 500,000 ounce Barara open cut, undeveloped, baseload feed, very big mineralised system, 10 minutes drive from the city of Kalgoorlie-Boulder. A fantastic address, close to all required infrastructure, and they have already spent the last 2 years getting all the statutory approvals in place for mine development and for mill construction. On Friday, 99.9% of McPherson shareholders voted for the merger, and we'll have that in place by the 14th of June in about a couple of weeks' time. You can see on the map there on the right-hand side, your right-hand side in the blue mauve colour, is the Barara asset and how it fits geographically with our higher grade assets supporting them. Step 2 is an asset acquisition. We've recently signed an exclusivity deed for the purchase of the 2.1 million ounce Coolgardie gold project, currently owned by Focus Minerals, another ASX-listed company. As I said, it's got a large high-grade resource base, and it has a processing plant with a capacity of 1.2 million tonne per annum. It is on care and maintenance and has been since 2013. In 2011, they spent 20 million refurbishing it. And we're fortunate that we've been able to pull that together, and you can see there in the slide in the light purple where that is geographically, 35 kilometres from Kalgoorlie. It's starting to piece the puzzles together. $19 per ounce was the purchase price, including a mill, and we've negotiated with the vendor a heavily deferred payment structure with a little bit of cash up front and some shares. And over the next 3.5 years, we'll pay that off. So it's essentially a quasi-finance loan over time. So let's put those three things together. You're now talking a 3.2 million ounce resource base. You're talking high-grade, underground and open-cut resources and reserves combined with the baseload feed, which gives you that critical mass, and a processing plant. The processing plant is in the wrong place. So the processing plant will be moved as a part of the feasibility study. If I had a pointer, I'd point to it, but you can see where the mill is at Coolgardie, the 3 Mile Hill plant, Our aim is to move that plant, refurbish it in Kalgoorlie and put it right next to the big base load Barara ore body where it needs to be to support its economics. So you've got the Bonnie Vale underground, which has a resource grade of 9 grams a tonne. It's a new underground discovery, undeveloped. That'll be a feature in our mine plan over the next 4 or 5 years. Briefly on our non-gold, we tend to JV our non-gold out. What that does is gives us retained interest, but it doesn't give us any distraction and we don't spend any money on it. It's all about focusing on our gold business without distraction, but we retain upside leverage and interest in copper, nickel, silver, zinc and other commodities while we focus on our gold. I mentioned divestments, non-core, we sell them. We've sold a project or our interest in a project to Saracen last year, 2.5 million in cash and a royalty. And on royalties, last year our royalty income stream paid for our G&A. And we can hope that will continue in years to come. So we're generating cash through mining. We've been self-funded all the way through to today, and we're embarking on a large growth phase. While I'm talking non-gold, I'll quickly mention a good example, which is our vanadium project in north-central Queensland. It's in the hands of a very well-qualified, Chinese-backed JV company called Richmond Vanadium. It's one of the world's largest oxide sediment shallow vanadium deposits on the highway near the port, extractable and upgradable to 1.5 to 2% vanadium pentoxide. And the JV partners are working in Hunan now on downstream processing, inclusive of salt roasting and acid leaching. For us, it's optionality. We'll wait for the feasibility study and the offtake discussions, and we'll decide what we do with our remaining 25%. Do we turn it into cash? Do we contribute? Do we dilute? That's ahead of us over the next 6 to 9 months. It sounds easy when you say it fast, but it's taken a lot of work to pull all these things together. And consolidation, certainly in the West Australian goldfields, and I think consolidation of the juniors across the globe needs to happen. We've been talking about it for years, and we are now doing it. We will complete a feasibility study, which is essentially the combination of all the feasibility work that's already been done. By January 2020, we'll be moving to project financing and bankable by June 2020, and our target for gold production is July 2021. And as I said, you've got a large resource base, excellent exploration upside. This goldfield has produced 120 million ounces of gold, and there's another 120 million to go, certainly in our view. You put these things together, you've got scale, you've got market cap pro forma, 70 odd million, you've got liquidity, and you've got a pre-production play and an expedited pathway with approvals in place, reusing existing infrastructure at an estimated half the capex of new, and an emerging mid-tier business that we're all quite excited about. The last company we ran got taken out by Evolution Mining. Certainly if they want to have a crack at this one, they can pay more this time. But we're very excited, very focused on it, and I think consolidation across the whole sector needs to continue. This is the first step for us. We're a group of producers and developers, and we're looking forward to taking this one into production at a $400 to $500 an ounce margin. Australian dollar gold price at record levels, over $1,900 an ounce yesterday. We completed Teal for $1,200 all in per ounce. So that's cash margin at scale with a group of guys who've been and done it before. Certainly not our first rodeo. Want some more information, come and see us. Booth A14, website, research. We'd love to have you along the ride for the journey. Thank you very much.
Thank you, John.